Yeah, hi, good evening, and thank you so much for joining us. Essentially, to discuss the new fund that we are launching in a couple of days. But I realize the title says Equity Market Outlook, so let me attempt to give one. So I don't think there's too much of a change from the views we've exchanged in the last few months. I think the consensus from our teams remain, I would say, the following. One, earnings growth is clearly picking up. It was obvious in the quarter ended September. We expect the quarter ended December to be relatively strong as well, especially on the back of the GST cut that happened towards the end of September. So the earnings pickup probably will make valuations more compelling than, let's say, same time last year. The second, I would say, which is far more important, sometimes in the, shall I say, euphoria or positivity around SIP flows, etc., we do forget the role sometimes that external flows play. And I think FI flows will always, for some time to come, have an important role, particularly in shaping sometimes short term direction, because those flows have a shape or perspective on sentiment and liquidity, and the two are frankly interchangeable. Uh, in 2025, we saw flows to emerging markets surpass flows to the US for the first time in about 12 years. So, from that perspective, I think it will be a matter of time before FI flows turn to neutral to positive from the negative that they've been for 18 to 24 months. So I think between the two of them, our expectation is that the next 12 to 18 months should see at some point a change from the range bound markets that we've been part of. Now, the one thing that I'm unfortunately not able to predict is when is that change or turn going to happen. But I also know enough from experience, and I know from a lot of people on the call would share that experience, that trying to be inch perfect in terms of timing a market recovery is always a very, very dangerous part to tread, right? So, from a market perspective, we continue to believe that as long as you have a 3 to 5 year perspective, it's a good time to be invested or investing for that matter. We also believe that there is a need perhaps to change a little bit of our stance. If you remember, for most of last year, we've held the view that at least from a valuation comfort perspective, large caps did give relatively more comfort than small and mid caps. And that's kind of borne out in terms of the calendar year returns. Large caps have clearly done better. Wouldn't say much better, but they've done better. But we clearly see that when you think about sectoral opportunities, when you think about market opportunities, trying to make calls about companies because they are large cap or because they are mid cap is again a very dangerous part to trade. So we prefer to be bottom up and come to whatever capitalizations across the flexi and multi universe as a outcomes rather than a input decision. The third aspect I want to touch on, having said all of that, in terms of pure business, I continue to reiterate, and I've said this in many forums, including forums where we've discussed more how does one grow your business as an MFD, etc. That I think 80% of a client portfolio should be in a cross section of flexi cap, multi cap, and multi asset funds, broadly speaking, 70 to 80%, and leave the remaining 20% for excitement. Uh, I'm going to take a slightly small step away from excitement and use the word difference, right? And I think having 20% of a client's portfolio devoted to things that are perhaps likely to be different from the rest of the 70-80% is always not a bad strategy, provided that there is a underlying logic to why that differentiated approach makes sense in the medium to long term. And to my mind, the fund that we are looking to launch falls reasonably squarely in that category. Now, some of you may say, hang on, This is an innovation opportunities fund. The last time I looked, there were already 10 innovation funds launched in the last 2 years. And the last time I looked, not too many of those funds did much for my clients. So, what makes you guys think that you're going to do anything different? I'm going to just talk about two, three things. One, there is a slight difference in word or title of the fund. People may say that it is just pure English, but I can tell you from lots of conversations we've had internally and also with external people that for us, innovation is probably just more broad based than the way it's conventionally been seen so far. And I think the way the regulators also approached it is that if you want to look at it at a slightly more holistic level, then innovation opportunities is a better title to describe what we are looking to do than pure innovation. And the reason for that is, to our mind, two aspects. One, there is a kind of a falsehood that kind of equates innovation and technology. And you will find from the presentation that Kirti will take you through that, especially in India, a lot of the innovation or the path breaking things have not necessarily happened in technology. In some sense, in fact, if I'm not mistaken, there's probably not a single example or maybe one or two examples of a technology company, right? So, effectively, the approach we take to innovation in our new fund is anything that is potentially a shade of radical or a shade of disruptive, which will result in a change in the way the business shapes up, which then leads to a change in the way the revenues of the company shape up, leads to a change in the way the profitability creates itself, then relates to a change in market cap. Because, quite honestly, to fill yourself with a portfolio of extremely good looking companies that have all ticked the box on doing wonderful stuff, but it eventually doesn't result in portfolio returns, doesn't really add value to investors, right? So, what we look to do is try to create a philosophy or an approach or a method that thinks about innovation as it eventually relates to market cap. And that, to my mind, over time will hopefully create that element of difference that it will bring to your customer's portfolio. So I'm going to stop here. I'm happy to take questions at the end of this, as will Kirti as well. But I will reiterate, uh, as you've seen, we typically now seem to be making a habit of launching new funds around the December, Jan, Feb kind of time frame. Some of you will fondly remember the small cap fund we did about December, Jan 22, 23. We did value last year. Uh, we did multi asset before that. So, in some sense, I would say we have a fairly decent track record of funds we tend to do at this point in time. So, God willing, that track record displays itself on Kirti. Don't feel any pressure, Kirti. But I'm going to turn it over to you to kind of just take everyone through what your thought process on innovation is, and then we can open up for questions. Over to you.
Sure. Thank you very much, sir, and welcome all. Thank you very much, first of all, giving your time. I think sir has already given a brief introduction, and I just want to take it forward that we perceive, or there are general misperceptions or perceptions that innovation is generally related to only technology and gadgets. According to us, innovation is includes all these things, but it is far beyond technology and the gadgets. We believe that innovation includes giving sustainable value propositions, which includes creating new products, new processes, new services, which are basically changing the existing business models as well. I mean, shaking the incumbents, as well as creating something more revolutionary. So it is definitely not only related to the technology and the gadgets part of it. And as we go through the presentations, you will see which are our daily lives examples, and we have been living through it. The entire civilization change has been on the basis of innovations, whatever has been played out so far. Just sharing the presentation. As the our slide mentions, you just have to imagine innovation in a new way, which is the reimagination. I think I'm assuming a majority of us here are fan of cricket, and the way innovation has panned out, we would like to explain you through innovation through the cricket way. As we know, earlier we used to live in the era where it was used to be a 5 days test match, the standard one, normal, pretty much 5 days to 4 innings used to get played. Then came your 1971, the first one day, which is called the product innovation. If you can view it, the period got shortened up from 5 days to one day. It used to be 60, then it got reduced to 50 over match. Something new which has happened. But what we call as a radical innovation, the completely change of format was this 1977 when Kerry Packer's World Series started. The change here was, apart from this 5 days and one day cricket, is the form of the cricket got changed to day night. It included change of even your dress code. Your Kokobora ball got changed to white ball. So it was something like a radical innovation, what we are classifying it. Look at it now, the new, the disruptive one, which has changed the entire, probably the way people see the game today of cricket, shortened the entire time frame, uh, from 5 days to one day to day night to now T20, which is, I mean, just a 40 over game, 20 each. Uh, it has introduced the new paradigm shift in the cricket per se. Now, when we say innovation, at the end of the day, that innovation has to be scalable, which is also we are talking about in our fund. What has happened here is the business model where the T20 cricket got changed into a proper business opportunity was the IPL in 2008, where obviously it included your marketing, the franchisee model, the way the entire platform got developed, not only in cricket. Because of the success of this particular event, it has got replicated. So the scalability has gone into the other businesses like your Pro Kabaddi, your football ISL league, as well as the women's Premier League. So one innovation, what we are talking about is when it becomes a radical innovation, it disrupts the existing business models. It gets scaled up, gets replicated, and it becomes a part of the normal life, which is we call about our innovation cycle. The innovation, radical disruption becomes a new normal, and again we move to the forward. This is the same function, or rather the same philosophy which we are talking about is a radical and disruptive. The same cycle which we saw, if I have to put it the way Joseph Schumpeter had come out with, we have lived through this almost now five waves already, and the sixth one is emerging. Every wave, if you see it from 1785 till 2020, these successive innovations, what is important to see here is every successive innovation, the time gap between these two waves have shortened. So first one was say 60 years, then came the 55 years and 50 years. We'll go through each and every wave's example and how it has transformed. The idea is each and every innovation has led to a movement of a civilization to a forwardness. It is not only disrupted the existing thing, but something new has happened. Like say in the first wave, first wave was your obviously the cotton mill. I think it brought about the industrialization. The seeds of industrialization got sowed in this particular innovation, this particular wave. It also led to the lot of labor and urbanization waves as well. I mean, our civilizations move forward in this particular thing. Then came obviously the railways. Acceleration of urbanization, industrialization happened. The movement of labor has fastened up because of this. The third wave was your obviously the Ford introducing the assembly line. This wave has actually led to the affordability and accessibility of automobiles to in general. So the consumption trade has evolved in this particular wave. The fourth wave, obviously the aviation. Your movement of travel, tourism, movement of your goods and services. Apart from that, the travel and tourism gained significant ground in this particular wave. The fifth wave, obviously, which we have lived through, almost the internet users jumping from 2.3 to 3.4 billion in 2016. The most important thing one can talk about this particular wave is apart from the internet and the kind of tech models, business models came into the picture, it has also led to the democratization of information. The kind of services which we are using today, whether it is an Aadhaar, UPI, etc., it has led to the information being available at a ease. Uh, the cost of information has also reduced. So this was the key features of this particular wave. Now the sixth wave, which is emerging and probably shaping up, is your clean energy. Apart from your renewable energy and so on and so forth, businesses getting shaped up, it is also shaping our investment on the financial markets. If you must have heard as well that in globally, the ESG finance, or say green finance, is taking shape. Majority of the some of the global fund houses also today requires that the requirement of ESG or your investments to be ESG. I mean, there has to be an angle of ESG, rather approved ESG approved criteria should be there. So I think going forward in future, probably we have to be watchful, not only from the on the ground level industries, but also in our financial markets for this particular wave. Now, what drives innovation? So there are multiple factors. There are roughly around six factors what we are talking about, which are essential to drive innovation. Uh, what currently we are using this Zoom or the MS Team video streaming, etc., is a function of your technology innovation, which we have seen it. The 5G was a key. Because of that, all your remote working, I think during the COVID time, or even we have seen that despite the entire businesses or the industries were made sit at home, one of the largest deals have happened, is a function of technological evolution what we have gone through. Now this GPS, apart from we using that for our travel purpose, because of this GPS and accurate navigation, majority of the industries are using these technology for their location marketing, etc. So food delivery is again one more service which has been evolved because of the GPS. So this is something like technological developments driving the innovation. Now the internal culture, like say it has been there within our company also. We try to find out new ideas, new sectors, new trends which are emerging, and companies like say Google and 3M, they have internal culture where 20% of their time is does go for looking around for these kind of new developments. Not 100% becomes success, but out of that 100, one becomes like your Gmail, Google, or say post-it notes, something like this. So internal culture fosters actually the innovation angle. Now, when you talk about government initiatives, government initiatives may not necessarily lead to creating something new innovation, but definitely it supports. Like say, government incentives, like say production link incentive (PLI), what we talk about it. Because of that, the entire semiconductor industry is getting the benefits out of it. We are moving up the value chain in EMS segment. Your creation of Aadhaar, for that matter. So the biometric link identification has helped to go for this digital only initiatives. Our KYCs, for that matter, is courtesy to this Aadhaar and biometric link identification. You don't have to your salesperson don't have to be there in front of you. You can do it at any point in time, not during the working hours, even at 10 o'clock or 11 o'clock at your own home. Is a function of all these initiatives. External crisis. External crisis actually leads to find out problem solving solutions at a rapid speed. Something like our vaccine during the COVID-19. If COVID-19 wouldn't have been there, though none of us would like to have it, but it was the function. I mean, because of that, the innovation of this mRNA vaccine has happened. Something like Livestrong. I don't know how many of you heard about it, but this is basically the product which has been developed by Swiss company from the humanitarian angle for developing nations, where because of the floods, the water used to get contaminated. So this particular product they developed for those regions, so this is basically a cartridge which recycles roughly around 4 lakh liters of water, which is ideally, I mean, this is a theoretical judgment, that this much water is sufficient for a one person for 3 years. Now the usage of this product has become so success that in those markets people have started using this as a consumer product. So something which has come out of the crisis became like a consumption product for that part of the world. Now the wars, from wars actually have been used as a to gain some strategic advantage. We talk about internet today. This ARPANET actually got developed during the Cold War. This has happened when US defense wanted to protect their communication systems from Russia. That's where the ARPANET got developed, and what we are using today, the internet, is a function of that. Likewise, the penicillin. Mr. Fleming, during World War One and World War Two, when he saw that soldiers are dying because there are no antiseptic available for the deep wounds, that's where the penicillin got developed during the World War One and World War Two in the battlefield. And just it was also by coincidence. We'll see the example of how the serendipity also leads to sometimes, development of this innovation. Last and the most important factor, resource constraint. Scarcity of resources is always the mother of inventions, how we talk about it. uh, Given this constraint of your coal and other fossil resources, that's where the alternative energies like your solar and wind power sources started getting, explode on a wide scale. uh, the same example, the financial constraint is leading many of these flex workplaces like WeWorks and Smart Works, etc. Our ride sharing apps as well, given at the peak of the time during the morning when you have to reach office, people would like to have the sharing, not only from the time point of view, but also it helps during that search pricing, sharing the cab. So these are all examples how what is driving the innovation. Now, in terms of our styles, when we are talking, there are two styles, basically radical and disruptive. When you say radical, means something which is it is you identify much before the others can do it. It involves significant change in your technology, products, processes. Something like, say, your petrol or diesel car getting into this IC engine, basically the automobile manufacturers going to electrical vehicles. This is something, it involves a lot of R&D, a lot of investment, and one can say a bit of visionary thinking as well. When it comes to disruptive, it involves a significant change, either internal or external, something which is shaking up the incumbents, taking the market share from them. Something like, again, you had opening your bank account digitally versus which used to be a very lengthy process. Now you're using it through Aadhaar and physical form, Aadhaar, rather than doing those filling of physical forms. Now, the types of innovation, basically, we are talking about three types: product, service, and process. Product involves creation of the new products, but it also involves substantially changing the product version. Your touchscreen, which is your smartphone. Earlier, we used to have keypads. Now that has changed to smartphones. Uh, Apart from that, your new, we'll give the more examples of this, but generally, not necessarily it has to be you have to create something new. Even the existing product can change shape and form, and that's where you have to be innovative to remain successful and be adaptive to that. Now, in process innovation is basically you are implementing any new process for the faster production or say quick delivery, say a digital banking account opening form versus via Aadhaar. I can say even your RFID. Okay, because of that barcode and RFID, your entire inventory management system had changed. Your checkout processes has improved. Another way of looking at is even your cloud computing, for that matter, or blockchain, that has improved your the way people collaborate today, has led to a lot of saving of the time. Service innovation, I think all of us use this or this service innovation in our daily lives. I think majority of us are using today uh, Zomatos and Swiggies for ordering, or say Blinkit for our quick commerce. So basically it's a new way of designing or delivering the services to the customers. So the difference between your process and services, process is something related to your internal efficiency, how you can make it more faster, reducing the cost or make it more efficient. Whereas in case of service innovation is more of towards improving the customer experience. So customer facing improvements is a key part in the service innovation. The UPI, for that matter, earlier the check payments or used to carry a lot of cash with you to pay. Because of UPI, I think none of our wallets have shrunk to a certain extent in terms of the size, how much physically you have to carry it. So that has helped. So it is a kind of service innovation. The example which we are talking about here, the touchscreen phone, The point what I want to mention, obviously, it had changed your keypad phone to all of us know about this. But in 2007, when this product got launched, the touchscreen, from till 2025, there are 42 successive variants have been launched. And whatever the $1 trillion market cap this company has achieved, what it shows is even though they came out with a one innovation, they kept on doing improvements in that, kept on doing new products, every adding some or the other new features where the sales can go up, or it meets the customer requirements. So you don't have to always change the entire form. You can keep the same core product and keep on doing the additions to the same product so that the acceptability, affordability, accessibility also goes up. So this is an example of your product innovation. Same. Well, this is going to be I guess, a game changer not only for this particular industry, but I think it will shape up many other industries. What started as basic study of your hormone in blood sugar control in diabetes, uh, what got observed, unexpected observation was the people during the trials, people were losing weight, and that weight reduction was something like 10 to 15%. So this research pivoted towards from the typical your blood sugar control to healthcare manage or the weight loss management. And I think the company which I'm talking about has once upon, I mean, the peak of its cycle, this particular product accounted for roughly 60% of their sales, making it world's top selling drug and Europe's most valuable company at that point in time. This is a perfect example how the serendipity, science, and strategy can lead to a market shaping innovation. Process innovation. I think this is a pretty daily example. We have gone through it. Now we don't find much innovation in that. But when it started, it was a game changer. Earlier, we used to have this traditional toll collection system. People used to stand. You need to have a change. I'm sure all of you must have been honked or must have got honked from the cars behind you because everybody was getting late. Congestion. Obviously, apart from the cash leakage, obviously there was a fuel wastage as well. Then came your FASTag. It actually made I mean, the experience of road travel more fun because obviously you don't have to wait. Everything is automated. You just pass through the FASTag toll. The money gets deducted. Importantly, the congestion got reduced to a certain extent. Your fuel wastage has reduced. Also, government is able to track because of this the traffic and the vehicle movement, which was very important. Because of this RFID, again, the money gets automatically deducted, so you don't even have to carry the change. Leakage has stopped. uh, I'm sure all of you, or including me rather, I would say that we get bugged or we get troubled by all these phones from banks offering us loan. But how it happens? Our banks or any of these banking system wherever you have used actually track your saving pattern, how you pay your bills, how you consume your consumption patterns. After tracking all these things at their back end, they process through algorithms your credit worthiness, and based on that they generate these offers. So when you get any particular offer, probably there is a high bit of chance that you may pay attention to it because your investor, how should I put it, the performance has already been checked whether you are eligible for it or not, and whether you will take it or not. Based on this, the offers get generated, and at the click of a button it gets transferred to your account. So this is again a process innovation. Again, the ride hailing, I think we have gone through this. Whenever you have to reach for your meeting or to the airport for a travel, uh, driver refusals, no doorstep service. Again, the pricing was decided as per them, especially during the rainy season. What has this GPS and smartphone or has helped apart from this location pickup and making you reach wherever you have to, is this has added the safety angle to it. Today, even for that matter, for anybody, you can track it. Your relatives at any point in time, you can reach safely. The data is stored to that extent, and most importantly, the availability of vehicle is there for you. Though there could be, because of such pricing, you may have to pay more, but at least the probability of you getting a vehicle is far higher today than what it was during the earlier times. This is the example to talk about it is menus to movies. Just to tell you, the company initially started as just a display of menus. From there, they expanded into getting into the hotel reservations, then providing bookings as well. When the pandemic came, obviously the quick commerce got added. That's where Blinkit and other services came into the picture. Now, how this company is pivoting to something else. The point here is mentioning just not the innovation of the tech led, but even any tech company at any point in time, they have to be continuously innovating to move forward. What started as a basic aggregator, now today we are there on that particular app booking our events and the movies as well. This particular business is taking share of something else which is already doing it. So somehow all these innovations always disrupts the existing business model. Though this is a tech platform, but this logic applies to even the existing old economy sectors as well, where anything new not only creates business opportunity, but it also disrupts the incumbents. Same presenting this Mahindra Manulife Innovation Opportunity Fund. So our focus here is what we are looking at is the radical and disruptive innovation happens because of the policy actions like your regulatory changes, like a PLI, as we discussed, how it has benefited the semiconductor industry. Along with that, there are global policy like US tariffs impacting the domestic companies. We have seen, if you remember, I think in the month of April, everybody was so jubilant jumping that, and there were sector calls and stock calls made that could be a beneficiary because we have a lower tariffs than probably other neighboring nations, and how the environment change in a few days time. Uh, so definitely these global policies, they do impact all the businesses, and how the companies disrupt incumbents in these established markets. We always talk about it, like how Birla Opus has changed the dynamics of the entire paint sector. Company which was having 60% market share, the leader in the industry for decades, has got shaken off because of somebody who is with the deep pockets can disrupt the larger player despite whatever strengths and the abilities and proven track record which was there. So basically the scheme is aiming to create long term value and capital appreciation from companies that are likely to benefit from all these potential disruption opportunities. Either they can do this through their existing business models in their or they can enter into the new businesses or sectors, as well as they can also benefit from the structural changes in the business or regulatory environment, which can be domestic or global. Now, everybody asks this question that, okay, this is fine, but how would you identify this radical and disruptive innovation? There are various factors, but these are the 4 to 5 factors we would like to highlight. Capital allocation. Generally, innovative companies do require capital. But what is important is whether this capital intensity is going into the right projects, whether the company is able to manage the cash flows. Do they have that kind of deep pockets? Something like, say, Birla Opus, which I indicated, they put up the capacity which is larger than the second, third, and fourth player combined, creating the niche itself, and which has disrupted the entire paint industry. Management team capabilities. See, execution is a key risk in majority of the innovation companies. So hiring the right talent from the prudent risk taking as well as the operational execution risk management is far important. Century Textile, when they created today, which is known as Aditya Birla Real Estate, when they created that Birla Estate subsidiary, they hired from uh, the existing market, the key executives. This was done so that that goodwill which those people brought to the table, along with their experience in executing those kind of projects, which has helped them to create a name in that industry. R&D intensity. I think the kind of R&D spending relative to the revenues, Reliance Industries' huge investments in new energies is creating the disruption in those new spaces. I think that will add to creating a first mover advantage, and probably a endurability or the longevity itself, because that kind of investment will lead to something innovation in future. Digital penetration. I think digital first model, something like Policy Bazaar, which is taking the insurance shares from the agent to digital platform. I think all of us, at least before taking any policy, would like to see at any point in time compare various policies which are available and pros and cons, which has helped. So something like this, creating the niche itself. The last one is a market share gain. Companies like, say, BKT, Balkrishna Industries, it is one of the larger player in off-highway tire segment globally. Now, what happens because of this is, when you have that kind of higher market share, you command the brand loyalty, brand strength, and apart from that, it helps you in controlling the your vendors raw material supply because of the pricing power you gain. So these are the factors we basically look for while identifying the radical and disruptive innovation. Some of the examples would like to give of this radical and disruptive innovation, something like technology pivot. Exide Industries, their core business used to be, say, lead acid batteries. They moving to lithium ion batteries and EV battery technology, something which is again future ready innovation, something which will shape the entire industry in terms of the EV as well as the your regular domestic automobile industry per se. Policy change. Given solar industries used to be known rather as in terms of providing explosives and other stuff in, say, mining industry, but government's initiative to curb imports in defense has led this company to pivot towards defense, and today they're supplying the ammunitions and these explosives and getting benefit out of the policy change what Indian government has come out. Shifts in global trade and tariffs. Obviously, we have seen majority of these tariffs coming into the picture and impacting many companies. Now, what companies are doing differently to mitigate that impact? Given the agrochemical is one of the segment where PI industries got majorly impacted, they started diversifying in differentiated products that command, say, premium, like, say, their pharma and specialty chemicals, so that the impact of the business which got impacted, agrochemicals, will be reduced to the minimum. Use of digital technologies for delivery of services. Now, delivery, I don't know how many of you visited, but their supply chain is one of the best what they have done. If anybody gets chance properly, one should see it the way they have done it. So they have transformed the logistic through entirely a data-driven supply chain, automation and predictive delivery system. So the loss of time is very minimal, the cost has reduced, and probably the deliveries are much faster compared to, say, other their peers. Industry consolidation, I think this we already spoke about. The Grasim entering the paint sector with kind of ambitious share target, which is leading to the consolidation in the paints industry. Macroeconomic developments. Sometimes innovation it does happen when you respond to the macroeconomic developments. Something like Tata Power, it actually from revolutionized the energy distribution with the solar rooftops and EV charging networks. Your emergence of substitute products or services. Eternals and Swiggies of the world, they have innovated the food services, which has created the different mode, like a cloud kitchens, also the quick commerce, which is again, they're using this AI-driven logistics as well, created substitute not only for your Domino's and the burgers, but pizzas and burgers, but also the other restaurants and the how restaurants serve the customers has changed because of these food apps today. Evolving consumer behavior, the way probably courtesy to quick commerce or the change of trends, all of us want everything at one go. Given the needs of, say, if I need today insurance or financing or lending, rather than having at three different places, how about having it at a one together? Sometimes when you have too many things available to you, you may not want to look at it, but probably there is an impulsive purchase can happen. We have seen that happening in generally in retail as well. So Aditya Birla Capital actually integrated their insurance lending, investment, as well as the financing part of it into a one unified platform to meet consumer needs. Expanding market share or improving pricing power. Just to tell you, Trent had the JV with Inditex, which is Zara. Globally, Zara runs one of the best efficient inventory model. Their fast fashion, or when you say the inventory cycle churn, is so fast that what you find in Zara store today, in a week's time, you will not be available. They implemented this strategy, what they got it from that particular, the learning what they had with this JV. They came out with a Zudio. The price points got changed. If you go to the west side, which is like a 2000 plus price points, when you come to Zudio, they strategically pointed to the 500 to 1000, targeting the college going students or the teenagers, where for the kids, probably as the kids is growing up from 2 year 3 year 4 year, you don't want to spend that much money, and probably 4 months you want to continuously change. That's where Zudio came into the picture, and it has become the success. Optimize cost structure. AI engineering is just an example to give, basically just to tell you, this is a company which is the second largest player in high chrome grinding media, which basically goes into the mining part, cement as well as mining. Now we have seen the various cycles. Despite that, whether the volumes goes up or down, AI engineering is able to maintain their margins. And how it is possible is purely on managing their cost well. And how they have done it is move up the product chain. Product mix got changed. I mean, within that, whatever they offer, the entire product mix, keep on maneuvering the changes, and the cost discipline and the pricing, what they do it. And this is the perfect example that whatever be the cycle of whether there is demand, no demand, or some supply chain side pressures, you manage your costs very well so that your margins get maintained. So again, Mahindra Manulife Innovation Opportunity Fund, which is going to open on the 9th January and up till 23rd January. If I have to conclude in this particular fund, what basically we are looking is the companies which will give access to future ready innovations, something which will give you a long value appreciation, capital appreciation over a longer period of time. uh, it is not definitely not a tactical trades. You need to have to be little longer term in terms of your horizon. uh, Something which will play through the cycles and gain advantage. This will be sector agnostic, market cap agnostic. So you're not sticking to one particular sector in terms of the innovation. Also, it is also giving you a diversification than typical sector thematic. So any particular sector not doing well will not have that drastic impact relative to the others, because innovation happens across. The kind of examples you have already seen, it is not something only related to one particular sector. It is across probably your financial services, consumer services, automobiles for that matter, apart from the digital platforms. So it is giving you exposures very diversified, not a singular one, not a concentrated one. So to that extent, it offers that diversification to the customers. Something which is the diversified approach, diversified risk approach will probably help to weather through these cycles and look forward for the success. Thank you.
Yeah. Thank you so much, Kirti. I think you can stop sharing. Yeah, that's fine. Yeah, so happy to take any questions. Like I said, we can take questions on the fund that we are looking to launch on the market as well. As you know, Kirti runs our mid cap fund as well. Just a matter of point, I think about 5 6 months ago, some people had expressed concerns about performance. I think you'll be happy to note that there's been a very sharp uptick, which is why Kirti is smiling. So, uh, effectively, uh, happy to take any questions. Yeah, okay. So I think we've got put the questions in the chat window, please. Uh, Kirti, I'm going to read the first question to you. The fund document mentions a blend of established leaders and emerging innovators. In your current view, is it safer to bet on big companies adopting new tech, like a large bank going digital, or small platforms disrupting the market? Which side you think the portfolio will lean towards?
See, when we are looking at innovation theme, it creates a universe for us in terms of the sample size. But the process, what we are going to implement for our portfolio construction remains the very much same, the way we manage our other diversified equity funds. So the GCMV framework, what we have, it will be the same framework which will get used. Uh, it is giving me the gamut of or the portfolio of companies. Within that, the selection will be the will be the function of at that point in time whether it is an investable idea itself or not. As I said, it's an established leaders, because some of the examples, as you have seen, there is enough and more scope that not only the emerging companies or new platform based companies need to be a part of the innovation. If there is compelling argument for that particular company based on your GCME criteria, can be in a portfolio, it will be in a portfolio. The same logic will get applied to even the established one. So innovation theme is used to give me the entire universe of companies to select from. the final portfolio construction will be the function of the same process, the GCMB, what we follow.
Yeah, and Bhaskarji, if I was to add just one point, I think there's a fair bunch of companies that are neither of the two, right? So there are companies which are neither necessarily large companies adopting digital or absolutely small startups, platforms, let's say like Eternal Swiggy. And I think what I'd point you towards, not that this is an indicative of the portfolio going forward. If you look at the examples that kind of tick the box in terms of how we look at things, you look at a Solar Industries, AI Engineering, Balkrishna, Trent, Tata Power. So it's kind of in the middle, right? I mean, it's companies which are, I wouldn't say very large, but they're not startups exactly, but companies that find a way to think of doing something differently, whether it's a service or a process or a product that makes a genuine difference to the way they do business. And future ideas, frankly, can come from any sector, from any cap. So I don't think we're going to be thinking too much about large versus small. Uh, there's no tilt in either form. In fact, in a way, if I was to describe it relative to your question, we are probably going to have a bucket load of companies which are neither of the two. Neither companies which are, we don't want to be tempted by, you have a Hindustan Lever and then you claim that Hindustan Lever also is doing ERP, so that's also tech and innovation. I mean, I remember in my past history I've seen Hindustan Lever in multiple tech fund portfolios on that basis. On the other hand, the challenge with small startups, if you ask me honestly, number of exciting companies, the price at which they're available, especially given that most of them are coming through the IPO route and are effectively exits for existing early venture capitalists, also ends up being not very tenable for a majority of the portfolio. So I genuinely think, I think that's one of the reasons why you see so many of the examples in our presentation being companies that actually don't fall under either of these two categories.
Just to
Paresh,
add, sir,
yeah, sure, yeah, please, Kirti.
any sustainable innovation needs to result in a cash generation. Anything persistent negative cash flows can make a business model very fragile. So when we are looking at any innovation companies, just because it's a startup and there is a hype around it and something like a digital platform, and that's why it has to be there, no, it is just a sample size. That's what basically wanted to say, just to add on that.
Yeah. Pareshji, what is the difference of the fund apart from other funds available in the market? Pareshji, like to be absolutely specific, like I said at the beginning of my conversation, there are 10 existing innovation funds. If you ask me, and this may be a bit of a blunt observation, the first 8 or 9 kind of looked at innovation stroke technology at the same prism. And if I was to look at their portfolios today, some of it is very technology digital heavy, or frankly it is very difficult to decipher an innovation fund different from a flexi cap fund. It's only in the last 3 to 6 months, and which is why, in fact, the regulators specifically required us to call this innovation opportunities. Somebody may say this is just English. It is not English, because if you want to invest in companies which are looking to disrupt in any form, it doesn't have to be radical, crazy disruption. It can be like, for example, a company like Birla Opus, part of Grasim, looking to create capacity which is equal to number 2, 3, 4, 5 put together. That is also a form of disruption and worth thinking about. Sometimes that can also lead you to think differently about existing other companies that could be impacted by that disruption. So to my mind, you'll find that this portfolio is, I would say, very different from what you would see from other innovation funds, as you'll see over time. The second, just as a indicator, uh, I think the regulator also, and quite rightly so, has been expressing that, do we not have too many thematic funds? And eventually, the more you do thematic funds, the more you have multiple flexi multi-cap funds, all in the form of all kinds of themes, right? And I think you'll find very soon some kind of direction that says that a thematic fund should be managed in a format which sits quite nicely in that satellite portion. If you remember, I spoke about the core portion 60, 70, 80% being in flexi cap, multi cap, multi asset. If you want to invest for excitement or differentiation, then it should genuinely be attempting to be different, but not for the sake of being different, right? You want it to be looking at a particular logical reason for money to be made. And I would put it this way that the one thing I would hope is different with our fund is the quite clear focus we have on eventual translation of that innovation, call it disruption, into market cap. I We are not looking to create a portfolio which is a very good looking portfolio, if you know what I mean. मतलब वो पोर्टफोलियो खोलते ही ना आपको वो वाह स्विगी है इटरनल एंड दिस इज नॉट आई एम नॉट सेइंग these are bad names, right? But I this is not about creating a portfolio of names of companies that are instantly recognizable because all of us in our daily lives know these companies inside out. It's about companies like Solar Industries. It's a companies like AI Engineering, Trent. Obviously, Trent is a very well-known stock now, but I'm just giving you that as a perspective. Uh, I have a question from Ram. What is the stock universe? How many stocks Mahindra is covering internally? I'll answer the second part first, and then I'll ask Kirti to kind of just do whether she has any initial thoughts on what's the universe looking like. So basically, we broadly cover about close to 550 companies. At this point in time, we basically have distinct investments across our existing AUM in about 269 companies. So there's a 269 companies in which we have at least 1 rupee, including about 64 companies in which we have only one fund that is invested. I mean, it may surprise you to the extent of length we go into this, but when you only manage money actively, you have to extract alpha from even the minutest detail. So the stock coverage is not really an issue. And just to give you some flavor, uh, courtesy Manulife, we deploy or we are in the process of deploying a significantly high-end AI tool that allows us to do a basic level of research on a wide variety of companies. But mota moti, 270 companies we have ownership in, 500 companies mota moti we'll kind of track. But Kirti, for this kind of a product, what's the stock universe in your head looking like?
We are basically looking at roughly around 40-50 range because it will not be too wide because given the nature of the innovation theme itself, it shrinks the universe for you within say NSE 500 what we are discussing here. But the tentative portfolio could be around say 40-50 range. That much I would say. It can probably given the market environment at that point in time when we are deploying it, the way the situation would be in the market can become on the lower side, but would not like to make it as diversified at 60, 70, 80. That is not the idea because we'll be a little bit more concentrated to that extent in this range.
Okay. We have a question from Nishikant. If you already have a broad idea of portfolio stocks that you've shortlisted, what's the expected earnings growth in near future for this fund? So I'd just like to clarify. I would not recommend this fund to people for the near future because genuinely, for a lot of stuff like this to play out, right? It takes it takes time, right? You have to be a little more patient. So my belief would be that a time frame that you need to give this fund is 3 to 5 years. And effectively, although I'm going out on a limb, I think you should be expecting 1 to 2% higher than a typical diversified fund, with I would believe 10 to 20% higher risk than you're taking with a diversified fund in that period. I mean, I would believe that's where this product kind of sits because while it's seeking to make a difference, if you think about innovation, impact, etc., one of the words that is not used, but if you look at so many of the examples that we gave, the word multi-bagger comes through. And obviously, since we are biased and we are making a presentation trying to encourage you to recommend this fund to the investors, we have not given examples of funds, the companies that attempted innovation and as a consequence absolutely flopped, right? So there's going to be hits and misses. It's not as if it's going to be only hits. So to that extent, I would believe that this is a fund that's seeking to improve the return expectation from a standard diversified fund, but naturally it's going to be a larger mix of hits and misses than a conventional diversified fund. So I'm obviously not answering the actual earnings growth, but I think in 3 to 5 years you'll find that having created this fund in your customer's portfolio, it is genuinely providing that level of difference or diversification. Another question again from Pareshji: don't you think that in the era of multi-asset allocation, our fund will do extraordinary return? Parij, I'm not sure I get the question, but like I said, I mean, and frankly, as you know, we're very proud of how we've done on multi-asset to date. I think, frankly, multi-asset, multi-cap, flexi-cap sit in a slightly different portion of a client's portfolio, which is very core, hold it. When you say long term, these are three products you can probably hold for 3, 5, 7, 10, 15 years. Obviously, clients have goals, they meet, they need the money, all of that happens. Uh, so I think in that context, multi-asset is a different animal, and it deserves, to my mind, a larger degree of interest in any case, because as you know, many of our clients have got enough investments in multi-cap, flexi-cap, large cap funds, mid-cap funds, large and mid-cap funds. Multi-asset is a relatively new category. So my belief is most clients would be under invested in multi-asset funds. So if I was to invest in core ideas, multi-asset would be top of my list, to be frank with you. If I was to invest in satellite ideas, which is trying to create a bit of differentiation to the portfolio, then having a look at something like this would make a lot of sense in my view. Okay, I think that's it for the Q&A. And while obviously this is not our monthly webinar where we have a committed timeline, ideally that we strive to for 1 hour. I think it speaks well for this NFO that we've kept to 1 hour for the NFO presentation as well. In summary, like I said, uh, we think very carefully about funds we launch. We don't want to be launching a fund just because it's the fad of the moment and stuff like that. But at the end of the day, we still believe it's the time frame. And as I'm ending, I do have a question from Virendra ji who says, "ये PPT में आपने बात किया T20 पे. Now you want us to be prepared for a test match. In this world of instant returns, you are now talking about long term. What about stretch stock valuations?" Virendra ji, this could have a I could have spent another hour on this. Equity and instant returns is actually a mismatch, right? And it's got nothing to do with valuations. Effectively, there's only one truth when it comes to equity investing, is that the only surety about making money from equity tends to be time. It is never stocks you buy. I can never buy a company stock and say, oh, I'm surely going to make money in this stock or surely going to make money in this sector. But I'm pretty confident that if I buy a decent company and I give it time, sometimes even if I've ended up buying it at a higher valuation, it's very challenging to lose money, right? So that's the reason about time. T20 was not really to say that this is a T20 fund. It was purely to give a context of how, even in the world of sport, innovation has played a role in changing the way the sport is seen, viewed, played. And then there's a great example. The reason we used it is there's a brilliant way in which the business side of it has also played out, right? In terms of the IPL, WPL, etc. So that was the only context of T20. I'm continuing to reiterate, and it's a change in stance. If you remember last year, this time, we were very clear. Given valuations, you want to invest in equity, ideally keep a time frame of at least 5 years. We now think that with the year of time correction, moving a little more progressively towards emerging markets, a 3 to 5 year time frame is a reasonable time frame. Valuations considered, because today's stretch valuations are only, if at all, a function of earnings growth that needs to come through. In a couple of quarters, we will see I'm not sure you'll be able to use the word stretched valuations, because either of two things will happen. Either earnings growth will come through, or time correction will continue, or both, right? So in that context, we feel very confident that this is a product that will do well for customers over a 3 to 5 year perspective. So I'm going to end there. Thank you very much, especially to all of you who've taken time off. I should have started with this. My bad. Perhaps, we are one of the few. In fact, I was told we are the only country in the world whose stock market is open on Jan 1. So you don't tend to on Jan 6th wish everybody happy new year. वो मतलब वो आदत निकल गया, right? Because unfortunately for all of us in this business, it's almost like, year has already, it's not started. It's almost like 31st has already happened a long time ago. But let me not make the mistake of not wishing all of you. And also thank you all of you for the continued support you give all of us. uh, I think you'll find from our general investment performance, I know that when I looked at our performance scorecard at the end of 31st December, uh, we've been pretty much above average in virtually every fund we've run. Yes, we had some challenges in the early part of 2025, but I think by the end of 25, uh, we've reached our goal, which is to be in the top two quartiles over a reasonable time frame, virtually across every fund we run. And I hope we can get your support from the customers for whom this product makes a lot of sense in this NFO as well. Thank you so much and have a lovely evening.
Thank you.